and gentlemen, good day and welcome to Salzer Electronics Limited Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Ohri from Progressive Shares. Thank you, and over to you, Mr. Ohri.
Thank you, Michelle. Good afternoon, everyone. On behalf of Progressive Shares, I welcome you all to the Q1 FY24 post-earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements which are based on the beliefs, opinion, and expectation of the company as of the date of this call. These statements are not guarantee of future performance and may involve risk and uncertainties that are difficult to predict. I now invite Ms. Savli Mangle for the opening remarks to be followed by the question-answer session. Over to you, ma'am.
Thank you, Rohit. Good afternoon, everyone, and thank you for joining us today to discuss the unaudited financial performance for the quarter ended June 30th, 2023. I have with me Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. Murugesh, Company Secretary, Ms. Menka, General Manager Accounts, Mr. Sanjay, Assistant Company Secretary, and Mr. Raman, COO of our subsidiary company, KC Industries. Starting with our consolidated quarterly financial performance, during the quarter, our revenues increased by 21% year-on-year to rupees 288.67 crores from rupees 237.90 in the corresponding previous period. This growth was driven predominantly by a higher demand for industrial switchgear products. The EBITDA excluding other income was rupees 26 crores as against rupees 21 crores in Q1 FY23, a year-on-year growth of 26%. Mainly on account of increased sales in the higher margin switchgear products. Our EBITDA margin for the quarter increased by 33 basis points to 9%, and the PAT grew by nearly 6% to rupees 10.17 crores in Q1 FY24. Moving on to the breakup of revenue as per business division, the industrial switchgear division contributed to 55% of the total revenues in this quarter. The EBITDA margin for this business stood at 11.32%, and this business grew 34% year-on-year. The raw material cost was down by 1.3% compared to the previous quarter, and we expect this to go down further, thereby improving the EBITDA going forward. The wires and cable division contributed nearly 40% to our revenues this quarter, and this business grew at 12.3% year-on-year during the quarter. The building products division contributed to about 5.38% in this quarter. On the exports front, we continue to see steady growth, mainly due to higher sales in North and South America, Europe, and Asia. Exports to the Americas grew 90% year-on-year. Asian countries grew by 94% year-on-year, and Europe grew 28% in the quarter. For this quarter, the export share was nearly 23%, with the growth being 38% year-on-year. Thank you, everyone. I'd like to now hand over to Rajesh to take us through the business developments and the way forward.
Thank you very much, Savli. I would once again like to wish you all a very warm welcome to Salzer Electronics earnings conference call for the first quarter ended 30th June 2023. Thank you all for taking time to join us today. We have already shared our results, and I think Savli also has explained about the figures. I think you also have the updated presentation and media release. I hope you must have all received and gone through the same. I would like to share a few recent developments and outlook for the future. Amidst the prevailing economic scenario, we acknowledge that the global landscape has experienced various challenges and uncertainties. Factors such as supply chain disruptions, fluctuating demand patterns, and geopolitical tensions have presented obstacles for businesses across industries, including for us. However, we are determined to adapt swiftly to these changing circumstances and embrace a proactive approach to steer our business towards growth and resilience. At Salzer, we view challenges as opportunities to innovate and evolve, and we have strategically positioned ourselves to pivot from these economic scenarios. The global switchgear market size was valued at US dollars close to 90 billion in 2022 and is projected to reach 145 billion by 2031, registering a compounded annual growth rate of 5.5% during the forecast period of from 23 to 2031. The rise in investments in energy infrastructure, renewable energy sources, as well as increased investments in rural infrastructure across growing Asia-Pacific nations, including India, driven by various government initiatives, is expected to boost the switchgear market potential. The size of the Indian switchgear market was estimated at US $9.75 billion in 2022. During the period 2023 to 2029, it is projected to grow at a CAGR of 7.12%, reaching a market size of US $18 billion by 2029. This growth is attributed to India's investment in smart grid technology, rapid expansion in power distribution sectors, and government investment in infrastructure development, including projects such as construction of new or expanded airports, metro stations, and electrical distribution networks. These developments are expected to provide excellent growth opportunities in the coming years for electrical switchgears. Furthermore, India's ambitious renewable energy targets, expansion of power transmission and distribution, increasing investments in real estate and transportation sectors are also driving positive developments in the wire and cable industry and promises a bright future for us. With technology becoming increasingly integrated, there is growing demand for next-gen gadgets and the rollout of 5G and 6G services. As a result, the application of electrical switchgears, wires, and cables is gaining more prominence than even before. All these new developments are anticipated to significantly increase the demand for the products that we manufacture. On the business performance of Salzer, some key developments. I think in this quarter we have seen good growth coming from our industrial switchgear business. On the switchgear front, growth continued to be driven by the products like toroidal transformers, three-phase transformers, wire harness, rotary switches, and isolators. For the last 3 to 4 quarters, we have increased our sales price multiple times. At the same time, raw material prices also have started to stabilize and also reduce a little bit, which helped to improve our EBITDA margins. We also expect to reduce our raw material consumption in the coming quarters, which will further improve realization of our prices, which will lead to better EBITDA margin in the coming quarters. As far as our subsidiary KC Industries Limited is concerned, the sales have been growing very well and EBITDA margins are also getting better. KC's top line grew 12% to 11.3 crores from rupees 10.1 crore last year. EBITDA grew 37% to rupees 1.47 crore from 1.08 crore. PBT margin stood at 11.31% in Q1 FY24. Apart from the financials, I am also happy to share that to further strengthen and professionalize our board, we have appointed 2 non-executive independent directors, one Mr. Sarath Chandra Bhargava and another one Ms. Priya Bansali. Both are experienced professionals with over 2 decades of experience and hold directorship position in various capacities in various Indian organizations. Mr. Bhargava, an engineer from IIT Kharagpur and also a management degree from Wharton Business School, has more than 4 decades of experience at Larsen & Toubro. He retired as head of electrical business group of Larsen & Toubro in 2017. Ms. Priya is a chartered accountant, also an information systems auditor, and an expert in direct and international taxation. She is the managing partner of an accounting firm, Kumbat & Company. I welcome them both and look forward to their valued inputs to help us take our company to new heights. Going ahead into the next fiscal, we expect to maintain our growth trajectory. The global shift towards renewable energy, such as solar, wind, hydro, has created new opportunities for electrical equipment manufacturers. Based on the domestic and export outlook, we are optimistic on our overall business performance and growth. I would like to thank my entire team at Salzer Electronics for their untiring efforts in growing this company, and also all our stakeholders for their continued support and faith in our company. This is all from our side for now. I would like to thank you all very much for your time and attention. We can now take questions from you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Congratulations, sir, for decent set of numbers. Just to begin with, if you could just guide us, if we see the sector per se, the opportunities are, really looming large for the country and especially for the, power and engineering companies. So if I see the competitors and the other sector companies, they are growing much faster and the guidance is equally strong. Whereas, I'm not seeing that kind of traction both in terms of growth trajectory and the margin expansion. So if you could just, guide us where, we are struggling a bit and what sort of, the growth and what sort of margins that perhaps we can consider on a console basis. I know one of your division is not doing that great, but broadly, if you could guide us if that can also catch up and can show us, strong growth and the margin expansion going forward. So if you could guide on that front, will be really helpful.
Thank you, sir. I think last year we grew at close to 30%, which was a reasonably good growth. I think in this quarter we have started seeing, I shouldn't call it as a slowdown because we still grew 20% year on year. But overall there seems to be the growth slowdown related to what we were seeing in the last financial year. So, I'm sure that the opportunities are much larger. There's a lot of buoyancy in terms of, investments, growth opportunities coming in the way that for the companies in India. But there are also a lot of global headwinds that is happening as of now. So that's why I think our projections for the year are limited to, I think, 20 to 25% growth rate. But if things change and we see a positive traction from India as well as from other foreign markets, we will be definitely able to grow at much faster rate. So I think, as I explained in my call speech, that the potential is definitely much higher, and we can see faster growth provided there are no global headwinds that can come our way. Mainly because I think a lot of people expect that US and Europe might go into recession and slow down. If that happens, I think that will hit the entire global market. And it looks like there is a slowdown in both these markets for the last quarter. So that's the reason that we are showing the guidance a little bit down.
Mr. Bafna, do you have any further questions?
Yeah, the margin trajectory, I would like to hear from the management that what sort of margin that we could look at, because last year we have done close to, let's say, 40 crore kind of profitability on the bottom line. So if you could just guide us the sense, for this year will be really helpful in terms of margin expansion and as well as net profit margins.
I think on the EBITDA front, we are giving guidance saying that I think the end of this year we will be increasing our EBITDA definitely by 100 to 150 basis points compared to last financial year, mainly because of better sales from the switchgear businesses and also better realization from both switchgear and wire and cables. On the PAT level, we are confident of crossing the 4% PAT margins in this financial year.
Okay, great. And sir, any broader guidance and expectation on the cables front? Because I think we are slightly not at par in terms of, but you guided that, that this division is also going to, grow as we move forward. So what is the outlook maybe for this year and the next year? If you could just say that what are the challenges and how do we want to, come up in terms of margin trajectory for that segment also?
Cables business, I think there's no challenge as such except for the pricing competition in the market. Otherwise, I think the business is growing at a speed that we are expecting it to grow. I think year on year we have seen a 12% growth. I think on a full year basis we expect that this business also will grow at around 18-20% levels compared to what it was in last year. But our focus on the wire and cable now is to expand the EBITDA margins. I think EBITDA margin percentage has actually dropped for us post-COVID from around 7.5% to 8% to around 6.5% to 7% at present. So our focus is to improve this back to around 7.5%, 8%, or even a little bit higher before end of this year. That's the focus right now. But on the growth front, I think we are growing definitely at around 18 to 20% in this division for this year.
Great, sir. And all the best for the good future performance.
Thank you, sir.
Thank you. The next question is from the line of Senthil Kumar from Joint Ray Capital Services. Please go ahead.
So good afternoon, sir. Thanks for the opportunity. Firstly, I could find a mismatch in numbers between your...
Excuse me, sir. I'm sorry to interrupt, sir. Your audio is too low. Can you please increase the volume a little bit?
Is it audible now?
Yes, sir. Please proceed.
Thanks for the opportunity. Firstly, I could find a mismatch in numbers between the media release and presentations. So in media release, the industry switchgear contribution to the overall revenues is like 55.04%, whereas in the presentation it is like 54.3%. So what is the reason?
Sir, I think it may be a standalone and consolidated figures you're comparing. I think all the figures that we have been giving in the call speech today is consolidated, including our subsidiary KC Industries. So all the KC business comes under the industrial switchgear business, so that's why you might see that 1.3% difference. Maybe I will also check on that, but I think that should be the reason.
No. Actually, what happened in the last quarter, the numbers between the presentation and the media release were same. That's what, I have a confusion with that.
Yeah, I think last quarter we were only talking on the standalone. I think this year we are changing to talk on consolidated figures from this quarter onwards.
Okay. And my second question, what is the gross debt as on June 2023?
It's the same as it in March 2024, sir, 265 crores.
Oh, okay. What is the interest rate?
That's the gross working capital debt. We also have a small 6 crore term debt apart from that.
Okay. Out of 265, 6 crores is term debt. Term loan. Am I right?
Plus 6.
Okay. And the last question is, how this enameled copper wire business is doing, sir? Actually, even in your opening remarks, you said like there is a huge investment in the domestic electric.
Mr. Kumar, your audio is feeble. I would request you to use your handset, please.
Okay, sir. Is it better now?
Oh, yes, sir. Please continue.
Okay.
The enamel wire business has grown around 5% year on year for this quarter. We have done around 40 crores, 37.5 crores to be precise. And it's continuing to grow because that has limitations on the growth because we are already operating at close to 80-85% capacity in that plant. So we expect this business to continue to grow only at around 5 to 10% this year.
Oh, okay, sir. And lastly, what is the interest rate in this quarter, sir? Interest rate?
I think the average cost of finance for us from all the 4 different banks that we are operating is between 7.8 and 8.5.
Okay, sir. Thank you, sir. Thank you. That's it from me. Thank you.
Thank you. We'll take the next question from the line of Bhagwat from Prosperity Wealth Management Private Limited. Please go ahead.
Thanks for the opportunity. Could you please update more about the factors contributing for margin improvement for Salzer going ahead and any plan for debt reduction, please?
Sorry, sir. Can you repeat the question again?
So my question is about factors contributing for margin improvement for Salzer going ahead and any plan for debt reduction.
The margin expansion will happen as we said in the call is because of the raw material consumption percentage coming down. That's one point. The second point, I think, increase in volumes, increase in business revenues will automatically increase the margin, EBITDA margin expansion because of the lower overheads. I think we expect these two will contribute in the expansion of EBITDA margins in this financial year. On the debt, I think we expect to maintain this level of debt going forward because of the long working capital cycles that we have been experiencing in the recent past post-COVID. However, we are trying our best to bring it down. We have done, I think, around 10 to 15 days reduction in working capital days compared to March. We will continue to work on that, but as of now, we expect to maintain this level of debt for this financial year.
Okay. Thank you for your answer, sir. So do you have the provision for analyst visit to your plants?
Oh, yes. We do bring in analysts, investors to plant visit. Yes, we can organize that. You can get in touch with our investor team. Ms. Savli is there on the line. I think she will note down and she'll be in touch.
Okay. Thank you, sir.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Mr. Poddar,
yes, sir.
Please proceed.
Yeah. So just have one query. I think, in terms of smart metering, is there any opportunity that we see for our business?
Yeah, Deepak, good afternoon. Yes, I think smart meter is going to be a big business going forward, is what we expect. We are looking into that. There is no concrete plans as of now, which I will be able to tell. But nevertheless, I think we are looking into that opportunity, and maybe a couple of quarters down the line, we will have some update on this if we get into that business.
Okay, so we are currently evaluating, right? I mean, whether to enter this segment or not.
Sorry?
No, so currently are we evaluating to kind
yes,
of...
we are evaluating that, correct.
To enter into the segment or not?
Yes.
Okay. Fair enough. Yeah, that's it from my side, sir. All the very best. Thank you so much.
Thank you.
Thank you. The next question is from the line of Gaurav Sachdeva from Further Investments. Please go ahead.
Hello. Sir, I want to ask why the finance cost has increased this quarter, because our debt levels are same and working capitals have decreased, but finance costs have increased. Why?
Sir, the rate of interest has gone up by close to 0.5 to 0.75% in this quarter compared to last year. I think that's one of the main reasons. And we also use some foreign currency loans like that for the exports, packing credit loans, where the dollar rate of interest has also gone up, as we all know. I think that is the reason for increase in finance cost.
And will it increase further, do you think, in next coming quarters, or will it remain stable?
I will not be able to definitely comment on that because we really don't know what is happening across the world. As of now, looks like the cost of finance will be high, in my opinion. I think that's what we are foreseeing for this quarter. Hopefully, it stabilizes at this level. If the Fed increases the rates, I think then definitely RBI is going to increase the rates and it is going to affect all of the businesses. But we hope that it stays at this level.
Okay. And so at what stage currently we are in the electric charger?
Electric charger, I think we are, as I mentioned in the last call, we are in the final stages of testing this with the ARAI. I think the testing is taking a little bit longer time than usual because of the queue in the test lab. We expect that the testing should be completed in this quarter, and we see that revenues start to come from either the third quarter or fourth quarter from this sale, from this year.
And sir, a lot many companies is coming in the electric charger field. How do we differentiate ourselves from the other companies or competitors? What exactly we are specifically making in this?
Sir, I think the chargers that we are going to make are fast chargers, mainly going to be deployed on the highways for charging cars in less than 30 minutes, unlike the low-cost slow chargers that will be in the domestic use. So these are fast chargers, and of course there will be some manufacturers for these fast chargers also in India, but as of now there are very few and limited players in this field.
And what will be the voltage or in terms, 250 watts?
Voltage, I think we are going to manufacture starting from 30 kilowatt chargers and going up to 300 kilowatt chargers.
Okay. Thank you. That's from me, sir.
Thank you, sir.
Thank you. A reminder to all the participants, anyone who wishes to ask questions may press star and 1 now. We will take the next question from the line of Nikhil Arora, an individual investor. Please go ahead.
Congratulations on the good set of numbers, sir. I have a couple of questions.
Yeah, go ahead.
Which products typically in switchgear and wire and cable division have contributed to this growth?
Sir, in the switchgear, I think it's mainly because of the toroidal transformers, three-phase transformers, wire harness, and rotary switches. I think these are some of the products that has contributed to the faster growth. On the wire and cable, it is across all the products.
Okay, sir. And the operating cost has increased roughly around 40 to 43% YOY. So what factors actually led to this increase, and what do these expenses comprise of?
I think the operational cost, the other expenses, you mean the other expenses, right? Yeah. I think let me go through that. One, I think in Tamil Nadu, the power and fuel cost the cost of power and fuel has been increased by close to 15%. So that has increased significantly for us. And also, I think last year, the expenses in general for us in the first quarter have been low because we were just recovering from COVID and we were just starting the push. But this year, I think our marketing expenses, sales promotion expenses, all of them have increased. I think these are some of the major reasons for that increase. Even otherwise, I think there has been a growth of 34% on the sales. So to that extent, the other expenses like freight, forwarding, subcontracting would have increased. But apart from that, we see that there is an increase in power and fuel significantly, and also sales promotional.
Understood. And are we targeting any new geographies in near future for export growth?
So we are already focusing on the Australia, New Zealand market, which we started 2.5 years back, and we are started to see revenues coming in from that market. And we have developed some new customers and new products for the North American market, and that has also started to see revenues coming in from Q1 of this year. And that's why we see very significant growth coming in from the North American market and also the Asian markets. And we expect that this year the business from these two geographies are going to be very significant. Apart from that, we have started to focus on the Middle Eastern market, where I think we see a lot of business started to generate because of the new investments being made by various Middle East governments. So that's another focus area for us.
Good to know, sir. One more question, sir. Who are the top 5 contributing customers?
There are multiple OEMs, so multiple international OEMs, MNCs, multinational MNCs. The different OEMs, we will not be able to specifically, I will not be able to specifically tell right now the top 5 contributing, but there are multiple customers for us like Honeywell, we have Schneider, we have Eaton, we have Siemens. So these are the major OEMs that we supply to who are major customers to us.
Yes, okay. Thank you so much, sir. That's all from my side. All the best for future.
Thank you. The next question is from the line of Abhishek Agarwal from Prithvi Finmart. Please go ahead. Mr. Agarwal, I have unmuted your line. Kindly proceed with your question.
Hello. Yeah, I'm audible now?
Yes, sir.
Yes, sir.
Yeah. So my question is related to return on capital employed and equity. So it's in the range of 10 to 11%. Okay. So can you explain why it is such kind of ROC or ROE we are doing with such kind of quality product what we have in our product profile? Okay. So just your brief understanding on this.
So we are working to improve our ROCE to close to 18%. That's what our target here internally is. And one of the reasons is the long working capital cycle. I think that is where the reason that, the capital employed is higher. So we, as I have been telling, I think we are working to reduce our inventory, bring down our receivables. So these are the two major contributing factors for higher capital deployment. So if we get this done and also improve our EBITDA margins by at least 1 or 2 percentage points, then we will see our ROCE growing significantly higher.
So we are targeting around 18% by what time?
At least in the next 2 years.
Okay. And what is our current capacity utilization in different segmental?
In different factories, it is between 60 and 80%.
No, different segment. I'm asking what.
Yeah, correct. Each segment has different factories for us. So.
Okay.
So, for example, switchgear factory, there are different products. So each product is made in 2 to 3 different factories. So that at plant level, we are at between 60 and 80% for each different products.
Okay. And what can be the growth driver for our business rather than the industry macro tailwind, whatever will come in the future? On internally, what we are doing to grow our revenue and improve our realization and bringing more value-added products, and are we doing any innovative product in our product profile? So can you give some insight on this?
We are constantly on the lookout to develop new products, to bring in new technologies, and we keep looking at the foreign markets. We keep looking at the world leaders, what is happening in the electrical industry, and we develop products according to that requirement. So that is how we have been growing and developing new products and adding new products to our portfolio. So we continue to do that. There's a large development team, close to around 65-70 engineers who constantly work on this and keep coming up with new products that can contribute to the growth of the company.
Okay, sir. So any particular factor which can drive our revenue?
I think
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे. कृपया लाईनवरच राहा.
I'm sorry, sir. Please continue.
I think this was clearly explained in the speech that there are a lot of macroeconomic factors that is working in our favor, which will bring in a lot of opportunities where we will be able to grow either with our existing products or develop new products, because we have the capability to satisfy a customer's requirement, whether it's a new product or a change in or customization of any of the existing products, because of the in-house capabilities that we have. So I think all those things will bring in the growth going forward.
Okay, sir. That's for my intent.
Thank you. The next question is from the line of Pranay Gandhi from Green Portfolio. Please go ahead.
Hi, good afternoon, sir. Thank you for giving me this opportunity. So I wanted to understand that the reported EBITDA margins of the building products division was 0.33 in this quarter, in comparison to almost 3% in the previous fiscal year. Can you please shed some light on this?
I think this building segment is the smallest division of ours, with contributing less than 5%, I think, this quarter. This quarter has been a slow quarter in that particular segment for whatever reasons, which we are not very clear, because overall the market in the real estate business has been a little slow in this quarter. So we have done only around close to 15 crores of business. So mainly it's a volume-driven business. So because of the lower volume comparatively, the EBITDA margins also have dropped. I think year on year we are down by 16% on revenues, and even quarter on quarter we are down by 11% on the revenues in that particular segment. So we expect the next 3 quarters to be good, and the EBITDA margins to climb up back to normal levels of 5 to 6% in this year.
Okay. And so I believe, as per previous commentary, that we would want to increase it to 10%. I mean, our ideal product mix would be 60% from industrial switchgear business, 30% from wire and cable, and 10% from building electricals. Correct?
Correct, sir. Correct.
Okay. And sir, in terms of recent expansion for wire harness and transformers, these are comparatively low margin products. So how does the management plan to counter this to sustain or improve its profit?
You're talking about which product, sir?
Harness and transformers.
I think transformers, I wouldn't call it as a low margin product, because they are high value products. Maybe the margin percentages can be lower compared to the switch gears like contactors or switches that we make. But these are high value, high technology products, and we use a lot of commodity like copper, steel, and various other products. So that can give a large absolute number, both in terms of EBITDA as well as in revenues. And also in the competition side, transformers have much lower competition compared to other switchgear products. So that's one of the reasons that we entered into a joint venture with an Austrian company, started making these three-phase transformers, and we are seeing the results because of the growth of the three-phase transformers that is coming in for us. In that particular product, I would like to say that we have grown close to 150% year on year in three-phase transformers.
Okay. And so my final question would be, previously the company had shared a guidance of 1,000 crores, which we were able to achieve. So now you have recently shared the PAT and EBITDA guidance for this year. Can you comment on the revenue as well? What kind of revenues are we looking to close this year, probably in near future?
I think this year we have already projected a 20% to 25% growth for this financial year on the revenue side.
Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Thank you for the follow-up opportunity. Sir, if you could just guide us, the potential of the current capacities, what sort of revenue that we can achieve without, much of the capex, and further on that, what sort of capex that you are looking at for this and the next financial year. So on both counts, to get a sense that what sort of, revenue potential we are targeting for next maybe 2 to 3 years kind of time frame.
I think on an average, historically we have been making a capex of 10 to 12 crores year on year, and some years we have gone up to around 15-20 crores, and some years we have been down to around 8 to 10 crores. But on an average, I think 10 to 12 crore capex we have been making to do the maintenance and also some dynamic capacity expansions for our switchgear industry, basically. So this we will continue to do for the next 2 to 3 years, and I think with this capacity expansion, with the kind of land building infrastructure that we already have, we will be able to double the turnover from FY23 levels. That's what we foresee.
Great, sir. And just on the net working capital cycle, we are a little bit, constrained by that also. So any scope for, improvement on that side, or can we consider the current net working?
We have a large scope. I think currently we are at around 145 net working capital days. There is definitely scope to reduce this to by around 30 days because of the inventory levels.
Okay, got it, sir. Thank you very much, sir.
Thank you, sir.
Thank you. The next question is from the line of Senthil Kumar from Joindre Capital Services. Please go ahead.
Thanks for the opportunity again. Sir, what is the receivable and inventory days?
Sir, may we request you to use your handset, please? Your audio is too low.
Hello. Is it okay now?
Yes, sir. Please continue. Thank you.
So what is the receivable and inventory days as on June 2023, sir?
Receivable days are 90 days, and the receivable figures are around approximately 280 crores, 281.
81, okay. Inventory?
Inventory is around 88 days at 270 crores.
270 crores. Thank you, sir. Thank you. That's it from my side. Thank you.
Thank you. We have the next question from the line of Janish Shah, from an individual investor. Please go ahead.
Hello.
Yes, sir.
Yeah, sir. Thank you for giving me this opportunity. I have a few questions, basically with regard to the exposures, the product exposures that the company has. You have products like three-phase transformers and wiring harness and rotary switches. Could we get some sense about how much is the current revenue on an annualized basis come from the renewable segments that the end product may be catering to? That's one question. And second, you mentioned the marquee names to which we have been catering to and have been the customers of the company. Could we have understanding about how the customer concentration has been for the company? Is there like top 4 or 5 customers contributing a significant revenue to the companies? If we can get some understanding on that. And third question is on the return on capital. You mentioned about 18% ROE. You mentioned it earlier as well in the call, that stated objective. However, when we and you also said that there is a scope for improvement in working capital. Just wanted to understand where the differences are. Basically, the things are moving contrary to what your expectation would have been when it comes to managing the working capital better. If you can just get some roadmap or maybe the hurdles which may be there today, and how are they going to get over by the company over next couple of years or so in that sense. Thank you very much.
Yes, sir. Thank you, sir. Thank you for the questions. I think on your first question, the figures that I give may not be very accurate, but we are very close to an approximate, close to an accurate figures. On the top 15 customers for us might be contributing around 45% of our sales approximately. That is the concentration that we have. We don't have a single customer giving business beyond 10%. So I think our focus and concentration, customer concentration is very, very less. And our sectoral concentration also is very, very widespread. I don't have a figure on how much of our products will have an end use in renewable segment. Maybe we should start looking at that and calculating that for the future. But right now I don't have that information. But we definitely see that renewables are giving good growth for us. So if I can tell based on the products that are being used in the renewables, approximately I think 15 to 19% of our sales might end up in the renewable business as of today. That's what on the customer concentration business. I hope I have answered your question. On the working capital, yes, I think we are struggling to bring the inventories down. What happened contrary to our projection was, I think, COVID. Before COVID, I think we were working seriously on this to bring this down, and we did some work on that, and we were able to achieve some results. But unfortunately, COVID stuck, and we had to reverse everything, and it went up. I think the inventories went up. The receivables also went up because of various reasons. So we are working on both this, and unfortunately, we are also in a segment where we don't have a very large credit period from our suppliers because of the kind of material that we are buying. So that's also, by nature of the business, it is against the working capital days. So our control is only on the inventory and receivables, which we are working to bring this down.
Yes, sir. I just to add to it, I mean, saying I understand the problem many of the companies have faced in terms of handling the supply chain. But when you're looking at today, do we really think the supply chain has aced out, or there are still challenges to it, which is why you need to keep the inventory levels high?
Most of the issues that COVID has given has been eased out right now. I think things more or less is smoothened, except for a few materials from a few countries. Otherwise, I think 90% things have smoothened out.
Okay. And maybe the last question, when we're looking at your company, it's definitely has been growing and has a potential to grow much faster in the years to come. But at the same time, the engines like the other pillars of the businesses like the margin and the return. I mean, when we are looking at driving the business over next couple of or maybe 3 years, 5 years period, what will be the priority for? Like I was saying, is the growth which will be the first priority and let the margin or the return ratios come by, or it will be like first focus on the profitable growth and will be choosing picking out your opportunities? How would you rate, or how would you look at your business to shape up?
I think that there was a similar question a couple of calls or a year ago on the similar lines. But I think I said the same thing then also. I think the focus is definitely to grow both the revenues and the margins. I think that's the focus, definitely. But at the same time, if we don't grow on the revenues, definitely the margins will shrink. I think that's very obvious for companies of our size. We are still not a very large cap, but at the same time, we are not a very small cap. We are in between somewhere, And for the size of our companies, we definitely need to grow at a minimum of 20% so that our margins keep expanding year on year. I think that's how we look at the business. But as we have seen that, the growth for us has come in the past years because of various additions of new products, new customers, new geographies. We have done a lot of things on that area to bring this growth. And because of the nature of the business we are into, as we have seen and talked about, for 50%, 55% of the business comes from a particular product segment which gives better EBITDA. A 40% business, which is wires and cables, gives a lower EBITDA. That's why we see the blended margins at 10% or sub 10% levels. But on the absolute numbers, if you want me to tell on the EBITDA figures, we have actually doubled in the last 4 years or 5 years, close to doubling. But for COVID, in between 2 years, I think we were stagnant. But on the absolute number, the figure of EBITDA has grown to 92 crores in FY23 from around 50 crores in FY19 or around that period. So we will continue to grow the absolute numbers, and we're also focusing on expanding the PAT numbers, PAT margin percentage. I think that's the focus.
Thank you very much, sir, for giving elaborative answers, and best of luck for the future growth.
Thank you, sir.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just want to understand that, the industrial switchgear segment that we have, and, when we sell it, is it like under, when we sell it to people like ABB, Schneider, etc., is it like under our brand, or is it like we sell it to them and they sell further in their brand? Can you help understand?
Majority of the business that we do is selling to them under our brand, but we also do certain branding businesses for some OEMs. But the majority of the business is we sell to them under our brand.
And just to understand, so then they will, the industrial switchgears that they sell, because they are also, they also sell switchgears, right? So I'm just trying to understand. So
yes, I think switchgear switchgear as a name is a very broad name, covers multiple products under that. Anything that goes into controlling or being used in a power electricity, I think people call it a switchgear. So it's a very broad name that we are giving for that. So what components we make, when we sell it to the OEMs, they take it and use it in one of their products and then resell them.
Okay. Understood. So between your sale to, say, OEMs versus sale where it is directly, to a contractor or directly where it is, used at a site, what would be the breakup of that?
For a distributor and the OEM breakup, I think we will be in industrial switchgear. We will be close to 50-50 between distributor and OEM business.
Okay, understood. And on the wire and cable side, right? Can you just give a bit more brief in terms of, when you say wire, what type of exactly wire and cable are we doing? Where does it, go into? And if you could just give some brief.
We manufacture all kinds of copper wires and cables. We don't touch aluminum, but we do all kinds of copper wires and cables starting from 0.3 square mm going up to 300 square mm, single core, multi-core wires and cables. So that's the portfolio of the products. And under this, I think there are multiple variants. we make wires for Indian standards, we make wires for British standards, we make wires for American standards. So there are people who have requirement only for American standard wires, and there are people who, for example, Middle East, they only buy British standard wires. So like that, there are different standards of wires under the copper wires and cables. The usage, I think, the simplest usage is your building wires, and the most complex usage is for a sensor or for EV charging cable. So we cover the entire gamut of application.
Mr. Parekh, sir, the current participant has left the queue. We will move on to the next question, which is from the line of Rohit Ori from Progressive Shares. Please go ahead.
So 3-4 questions. While you are cautiously bullish or maybe cautiously optimistic, we see the export slowdown, which has come to somewhere around 23%. Do you think you'll be able to catch up the same to the regular average of 26% because of maybe China +1 or Europe +1?
Yes, I think definitely we will. Last year we ended up 26%. We definitely see that it will not go below 26% for this financial year. We are optimistic on the export front, mainly because we have developed these new products and added these new geographies. So that is the reason I'm optimistic that we will definitely grow further on this.
Okay. So would you like to give some insights into the property at Hosur and the wire cable business that is happening over there?
I think it's a very, very new plant, so there's not much development that has happened there, but we are working on getting new customers. We are seeing a lot of enthusiasm from the customers to come and see the plant because it is closer to their requirement facilities that they have in Bangalore or nearby Bangalore. So we are working with multiple large customers, both in the industrial as well as the automotive side, and we expect that the business to really start giving a lot of in the sense growth from at least Q3 of this year onwards.
And by when do you think that the plant could reach its maximum capacity?
Hopefully by end of this year.
Okay. So we did touch upon some businesses related to solar industry, maybe the inverters or AC/DC contactors. Do we have any orders in this domain, maybe from the domestic market or from the international market?
Yeah, I think on the renewable side, we have good businesses coming from solar inverters, inverter manufacturers for our transformers and wire harness. And we also get AC/DC contactors is not for the renewable business, but it's for the HVAC market in North America. For that also, I said that I think this quarter onwards, we have started seeing the revenues from that business also.
So can you put a number to these businesses for HVAC and solar industry related businesses?
I think the HVAC is still small because we just started in Q1 of this year. But the solar, as I said, I think I mentioned that it will be between 15 and 19% of our revenues coming from the renewable business.
Okay. So my last question is, you did perform well and you doubled the turnover despite the pandemic in last 4-5 years. Do you think you'll be able to double the turnover in the next 4 years, or do you think you'll be able to do it at a faster rate as compared to the previous years?
I'm confident that we will be able to do this definitely in 4 years. But if things work out well, yes, maybe we can do this 1 more year earlier.
Okay, sir. Thank you for answering my question. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Rajesh Doraiswamy for closing comments. Over to you, sir.
Thank you very much, all of you, for showing such a large interest, huge interest in Salzer and its business, and looking forward to speak to you again, interact with you again in the next earnings call. Thank you very much.
Thank you, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Progressive Shares, that concludes this conference. We thank you for joining us, and you may now disconnect your line.